I hope everyone is doing well and had a good day. In this video, I will review the first couple of hours or so of the Emini 5-minute chart for Monday, January 6th, 2025. Top left of my screen, we have the weekly chart. It's the first day of the week, so as we go into the week, here's what we see. Big down, big up, big down, overlapping bars with big tails and small bodies. It's a lot of trading range price action. So because markets have inertia, I expect more of the same. We're in the middle of this tight trading range. So what about last week? Can you buy above last week's bar? Technically it's a buy reversal bar, but it has a bear body. And again, if you're entering on a stop order in the middle of a tight trading range, more often than not, you're going to get chewed up. This is a limit order market. So here, regarding last week, probably sellers above the high. And if we get below the low, probably also buyers below the low. But I expect more sideways. And on the daily chart, this is the Globex daily chart. So there's less gaps. This shows the overnight session. Big bear breakout, deep pullback, second leg down, but now a higher low. And then a bull bar closing on its high last Friday. So what about buying above this bar? For me, I think last week's Friday, this bar is a bar that always in bears exit above. It's a second reversal, it's nested, so one reversal here, second one here, but also we triggered the buy above this bar on this outside bar, reversing up a second time, and it's a bull bar closing basically on its high. So traders, I think bears will exit above this bar. The problem is that it's 4 or 5 consecutive bear bars. We have a breakout point up here, top of a trading range, so probably resistance up here. So even if we do rally, if we trigger the buy and rally, the upside might be limited because of the resistance up here. You have bulls who bought over here. So a bull who bought this close, disappointed. If they were not quick, they got trapped into a losing position. So if we get back up here, I suspect there will be disappointed bulls and other trapped traders looking to sell up here. For the 5-minute chart today, here's Friday's close, and today we had a big gap up. And bar 1's a bull bar, but it's basically, you can call it a doji. Traditional dojis are basically just a bar that closes on its open, and kind of like this daily chart bar. But here, if you make decisions with binary decision making, so you just have two options, it's either a trend bar or a trading range bar, or it's either a trend bar or a doji bar, then bar 1's a doji. It's a trading range bar. Relatively small body, big tail, prominent tails above and below. Probably sellers above and buyers below. But after the big gap up, probably going to get a second leg up. So more likely, probably better to look to buy, always in long on the open. Inside bar on 2, it's a trading range bar. So again, small body, big tails, probably buyers below and sellers above. But again, in this context, after the gap up with a follow-through bar, it's probably better to look to buy rather than looking to sell. And then 3, bull breakout bar. So let's think about bar 3. I said there's probably traders selling above bar 2, and that's true. It's a trading range bar. It is an inside bar, so some traders may prefer to sell above bar 1. This is the top of a 2-bar trading range. But then bar 3, let's say you sold above bar 1, and bar 3 is your entry bar. What happened on 3? The market rallied all the way to the high of the bar and then pulled back into the close. So if you sold here, you were at a loss for at least some of the position, and it looks like you really were not holding a winning position at any time. And maybe we did dip below this high during this bar, but the point is we closed here, so it's a more disappointing entry bar. If you're a bear and you sold here or above 2 or anywhere, 3 is a disappointing bar. And now we have a 3-bar bull micro channel. Each high is above the prior high and the gap up. So disappointing bar for the bears on 3. And if you sold above bar 1, you're disappointed with 3. You may look to sell higher because clearly there were not sellers here. We rallied and found sellers up here, but now here, this, what traders were expecting to be resistance, becomes support. And then traders bought the close of 3. We had a breakout, a pullback, a second leg up. Now it's a minor second leg, meaning this is all one simple leg. There's been no pullbacks yet. Bars 1 through 4 are all part of the same breakout. So this breakout leg is probably going to get a second leg up, even if we pull back first. But because bar 4 is 2 legs up, you can look at it a couple of different ways. Bar 1, leg 1, then a pause on bar 2, implied pullback, and then 3 and 4 is leg 2. Or bar 3, we rallied, sold off, rallied a second time. So there might be resistance up here, some traders looking to take profits. But as far as selling, not really anything to sell. Better to wait for a trend line break and then a retest of the trend's extreme. So always in long and really no reason to sell. If there's no reason to sell, then you can hold on to your long positions. Sideways on 5. So it's another trading range bar. We tried to test the high of bar 1 where traders got trapped, and we didn't quite get there, and that's disappointing for the trapped traders. So if you sold above 1, scaled in higher, you never got back to your first entry price. And at some point, a sense of urgency, you begin to feel that sense of urgency. You want the market to get back to this red line, and it's not getting there. You give it another bar, and it's still not getting there. And at some point, you begin to think, well, now we have a 6-bar bull micro channel, 3 and 4, big enough breakout, second leg likely. And bulls are looking to buy a pullback. Bears are looking to buy back shorts on any pullback, but both sides are not really getting much of a pullback. The market's going sideways, but we're not getting any technical pullbacks on the 5-minute chart. No bar is going below the low of the prior bar. So this is still a breakout on a higher time frame. Because of that, traders will start to think, let's think about both sides. The bulls, they see the rally, and they're not in the market, and they're waiting for a pullback to buy. And 5 pulls back, but not below the low of the prior bar. 6 pulls back, but also not below the low of the prior bar. There's a sense of urgency. The bulls are thinking, it's not going down, I gotta buy. The bears thinking the same thing. If they're holding a losing position, maybe they even scaled in higher. They're looking to avoid a loss or exit with a smaller loss when the market pulls back. But they also think, well, the market's not pulling back, I gotta get out. And then traders buy on bar 7. Bull bar closing on its high, really not ideal to be fading this bar in this environment. It's a tight bull channel, still technically a breakout because it's a micro channel. So probably going at least a little bit higher. And then bar 8 pulled back before rallying higher. So kind of disappointing for the bulls. The bulls who bought above bar 7 realized they could have bought a pullback, and this went further than the midpoint of bar 7. So traders are buying in the buy zone of the bar. That middle line is 50%. You can see we dipped below it and found buyers. But this is not a classic strong breakout with little overlap and this sense of urgency. Traders are buying in the buy zone of bars. You could have bought the midpoint of bar 4 5, even 6, and then 7. So this is a channel on a smaller time frame. So a bull bar closing on its high, but now we rallied on 1, we paused, rallied to 4, paused again, and rallying a third time. The fact that this is a third push increases the chances that we may have to pull back here. And pull back to where? Well, we may have to test the bottom of the most recent push up. So 1, pull back, 2, pull back, 3, maybe the bar 5 low. And then bar 9, we had an outside up bar. Market came down, tested below bar 7, we found buyers, reversed up, but same problem on bar 9. We have 3, maybe 4 pushes up. 1, pause, 2, pause, 3, pull back, 4. So here, you're going to have bulls probably looking to take profits at some point. Lots of overlap, far above the moving average. You can also draw a channel line that connects most of the highs of the bars. You can see we're close to that, depending on how you draw it. So we might be testing a channel line, which is where traders sell. But at this point in the day, think about how easy is it to make money as a bear. Even a limit order bear is having a hard time making money today. So probably always in long, better to be looking for buy setups. We're also far above the moving average, every bar completely above the moving average. The moving average is an easy way, a quick and easy way to get an idea of the overall regime, the always in direction. And of course, in this case, up to this point in the day, it's been more bullish. So probably, again, better to look to buy. Inside bear bar on 10, but big tail below the bar. And think about the stop order trade. If you're selling below bar 10, is that a high probability trade? Probably not. So probably buyers below 10, scaling in lower. It's also not a great buy above the bar. It's an inside bar, IOI, bears hoping. It's a final flag, breakout mode pattern. We're going sideways for really almost since bar 5, sideways to up. And especially 8, 9, and 10. Lots of overlap. Bad stop order, buy signal bar. Increases the chances there are sellers above bar 10. But the big picture, bars 1 through 10, it's a bull breakout on a higher time frame, so still better to look to buy. So we traded above bar 10 and found sellers above, but this looks like a minor reversal. No significant trend line break, not even a bear bar closing near its low today. So as far as selling, I would not sell. Probably buyers below these weak reversal attempts. 12 breaking out to a new high. 12 is the last bar in the 60-minute chart bar. So bars 1 through 12 make up one 60-minute chart bar. We can see we have a bull trend bar closing on its high. Good for the bulls. But when we crack open the bar and actually look at the price action on the 5-minute, we see a lot of two-sided trading. And this is, to me, it looks like a variation of a spike and channel trend. 3 and 4, bull spike, pulled back on 5, and we've been channeling all the way up to 12. And so at this point in the day, I'm not sure for an equidistant move on the close of 12. I'm not 60% sure we're going up here before here. This looks like a bull leg in a trading range. We know the market cycle, spike, channel, trading range. So bull channels typically evolve into trading ranges. So it can be dangerous to be buying up here. With all that said, there's still not a great reason to look to sell, at least not yet. We have very little selling pressure and no trendline break. And again, this is a breakout on a higher time frame, so we can easily go higher. 13, bear bar. Finally a bear bar closing near its low. Implied second reversal, 1, 2. So 13 might be a bar that traders exit longs below, and bears can sell taking a chance, but still low probability. We may pull back here, but the odds are the first reversal attempt will fail. So 13 or 14, another bear bar, but smaller bar. We sold off on 13, rallied into the close, and sold off on 14. This is 2 legs down, testing the low of bar 10. So on a very small time frame, smaller than the 5-minute chart, this is a nested high 2 pattern. High 1 during bar 10, high 2 on bar 14, and even here, high 1 at the low of bar 13, high 2 at the low of 14. So it's a second reversal in the bigger picture, 1, 2, and over the past 2 bars, 1, 2. So probably support in this area, and the overall market direction supports looking to buy here rather than the reversal. 80% of reversal attempts will fail, and this one does not look particularly strong. 15 bull bar, closing near its high, and probably a bar that bears exit above if they're short for any reason, and if a bull exited for any reason, they can buy again above 15. Still always in long, still a bull channel. 16 bull breakout, weak close, but pretty good distance. Traders selling above 14 or 15, trapped on 16, very similar to bar 3. Reminds me of bar 3. Remember what I said earlier. Traders selling above 1, trapped on 3, even though there's a big tail, the close isn't great, became a breakout pullback and buy the close bar. So 16 to me looks similar to that. So traders here got trapped. Bulls missed the rally. Bears got trapped into a losing position. We're pulling back. 16 might be a buy the close bar. We fell a little bit further, but then went outside up, almost outside up. 17 breaking out to a new high, but might be a late leg, 9, 12, and 17. The market's channeling, and how do traders behave in a bull channel? Bulls buy pullbacks and take profits at new highs, and this is a new high. We have maybe 3 legs up, 1, 2, 3, and here 1, pullback, 2. So reasons to take profits up here, but not as much reason to look to sell to go short. 18 inside doji bar, probably a minor reversal against the always in direction. After 3 consecutive bull bars, probably a minor reversal. Traders might look to buy. Remember this price level, traders who got trapped here. This is expected to be support. So there might be more traders buying below 18, maybe not directly below the bar, but at support, some distance below the bar. And that's what we had on 19. So 18 sold off, pulled back, sold off a second time on 19. So a high 2, second reversal up in the direction of the major trend. So bar 20, bar 19 might be a buy the close bar, or there might be buyers at the midpoint of the bar, or even in the midpoint of the lower tail, the rally into the close. It looks like this is very nitty-gritty details, but we did find buyers here just below the 50% level of that tail. Bull bar closing on its high, 3 attempts down, 1, 2, 3. On a smaller time frame, it's more clear. This would look like a truncated wedge, which is where the third push down does not get below the second push down. So 1, 2, traditionally 3 down here, but instead it's up here. It's a weak bull bar. It's a doji, but it's closing near its high, and it's in the direction of the always in. So probably bears exit above this bar, and traders who are flat can buy. Bulls might add on to their positions. So we go higher on bar 21. Probably going at least a little bit higher, probably going to a new high. But if we do go to a new high, probably sellers not far above because we're channeling up. And I mentioned before, bulls are buying pullbacks and taking profits at new highs. '22 came back and tested the high of 20 and then rallied to a new high. But again, we're testing this channel line. We have maybe 1 or 1, 2, 3 pushes up. So again, probably resistance up here. Bulls taking profits. Bears looking to sell for at least a scalp. And then another weak bar, similar to 18 on 23. So probably another minor reversal, but since it's 3 legs up, increased chance we come back and test the start of the third leg, which might be the low of 19. So we could test all the way down here. So rather than stay long, bulls might exit below this bar or exit on any rally and then look to buy lower. 24, outside up, but bad, signal bar to buy, 23. And 24 really did not get far above 23. And it looks like it broke out further to the downside below 23 than above. 24 is an outside bar, so that's an expanding triangle on a smaller time frame. Like I said, looks like we broke out further to the downside than to the upside. So even though 24 is a bull reversal bar closing on its high, the breakout is more bearish. And then bad follow through on the breakout for the bulls. 25 bear bar closing near its low. Nested wedge, 1, 2, 3, and then maybe 1, pullback, 2, or 2, pullback, 3. Different ways to look at it, more clear on a lower time frame. But the point is, we'll probably pull back soon. And getting out below a bear bar, closing near its low, makes sense as a bull. So bears might sell taking a chance. Not a high probability trade, but good risk reward. Bull bar closing near its high on 26. But for me, if this is a small pullback trend, it's really tricky for me to want to stay long when the market's getting squeezed and we're at a channel line, because I know the odds are breakouts of channels only succeed about 25% of the time. More likely, we'll continue to fail and then we'll test not only the trend line, but again, we might test lower and develop into a trading range. So buying here, you really need follow through immediately. You're buying far above the moving average and the price action, lots of bars with prominent tails. There's opposite bars. This looks like a leg in a trading range more than a strong bull trend. 27, second reversal, 1, 2. To me, it's a bar that if I'm long anywhere for any reason, I'll look to exit below 27 because I think there's, the probability is real that we pull back and test the 24 low, maybe even the 19 low. And who knows? Because of the market cycle, spike, and channel, we could test the start of the channel, and who knows, it could be all the way down here. That's the risk. Buying up here. And that's why selling up here is a bear. You get low probability, but good risk reward. 28 triggers the stop order sell, weak entry bar, but the flip side is that it's a bad stop order buy signal bar, so probably sellers above 28 and second leg down likely. We triggered the high 1, but we're at the top of a channel after 3, maybe 4 legs up. So there might be more sellers above. We'll probably start to go more sideways to down here. 30 going more sideways. It's a breakout mode. It's a triangle, lower highs, higher lows. And like I said, the risk with being long here is the market cycle. if you start to lose momentum, even if this is a breakout on a higher time frame, we lose momentum, the breakout phase ends, and then we pull back and then begin maybe the channel phase, but the pullback could be all the way down here or even down here. Bear breakout 31. It's another breakout with a weak close, but the distance was good. So any trader who bought below bar 30 or 29 and even 28 got trapped on 31. Second leg down likely, probably resistance above. 32 tested that resistance, the bar 30 low. Tried to continue, but now we have a micro double bottom and a double bottom with 24, but a 3 or 4 bar bear micro channel. First reversal up will probably be minor. It looks like a trading range, so traders are buying low, selling high, and scalping, so probably limited upside here. And then a give up bar 33. So what about the 20 moving average gap bar setup? We've had 20 bars, more than 20 bars, completely above the moving average. So the first test of the moving average can be bought for a test of the trend's extreme, right? That's sometimes true, but remember what Al says about rules versus guidelines. There's a reason there's no rules in trading, and that's because there's no such thing as a perfect setup. You cannot have repeatable rules that work every single time. You need to have exceptions. So here, think about the approach to the moving average. First of all, think about the general strength of the bull trend. Looks like a channel, not very strong. Sellers at new highs. Stairs pattern, limit order bears beginning to make money. We may test, like I said, maybe here, here, maybe here. So we don't know where we might test down to. So that's the danger of being long up here. But not only that, as far as buying here, you've had one bull bar in the past 7 or 8 bars. So that buying pressure is not very good. This is a bear breakout that's likely to get a second leg down, even though there are 3 pushes. Yeah, we might pull back first, but there's probably sellers above bar 33. And the 34 continuing even lower. Now we might test the 19 low and develop into a trading range. The high might be up here, but we need at least a second reversal after the sell-off. And we just continued lower and lower. And this is very disappointing if you're a bull. Sort of an endless pullback. And it's a pretty decent bear breakout, crossing the moving average, lots of bear bars. Not great that there are tails below bars and overlap, but it's a big enough breakout, probably disappointed sellers, disappointed traders above, so anyone buying becomes a seller. So resistance above. And then we just continued even lower. Remember what I said, spike, pullback, channel in the market can, first of all, it often converts from a channel into a trading range, but it often tests the start of the channel, which also often becomes the bottom of a trading range. But in this case, we tested it a couple times, tried to reverse, broke out below it, probably getting at least a second leg down, tried to reverse a couple of times, and then got the second leg down. There's the bar 1 low, probably support, with less than or maybe 30 bars left in the day. And what are the odds this becomes a big bear trend day reversal bar? We rally first 25 bars or so, and then reverse and fall for a measured move down of this rally. Well, we have to judge the momentum and judge the strength of the bears. But big bull bar 53, big bull bar 56, 57. Not ideal for small pullback trending behavior. This looks better for the bears. Although it looks fairly weak, it looks like a leg in a trading range. There's been almost no bull bars up here, but here bull bar closing above its midpoint, and same here. So probably not going far below the low of the day, and because it's probably a trading range day, big up, big down, I also suspect that the bulls and bears will fight over the direction of the close today. So here's the open of the day. It fell far below it, so probably not getting back up to it, but spike, channel, maybe buyers at the low of the trend. We may get back up here. Another breakout, but 3 legs down. Big bull bar 77, but completely below the moving average, almost completely overlapping the prior bar. So you have to ask yourself, breakout of what? And really not much of anything, so more of a trading range here. So the open of the day is beginning to look more and more out of reach the closer we get to the close of the day. 78, good bull bar, crossing the moving average, getting more follow through. And may have gotten close to the open, but not quite there. So a slightly more bearish close on the day today. Again, this is the Globex chart, so that's why there's a bull body on this daily chart. For stop order trades today, it's really hard to buy for me with a stop order in the first part of the day because traders were buying pullbacks and the pullbacks were implied, so you were having to either enter on a limit order or go to a smaller time frame to enter on stop orders, which I do not recommend. And one way you can think about stop orders is if you're a bear selling for any reason, where do you have to get out of your trade? And for me, bar 3, if I get short on bar above bar 1 and I get bar 3, ideally I just exit, and that's not the greatest trade in the world. But if I do enter and I have to have a stop in the market, it's probably above bar 3. And especially bars closing near their highs. Bar 4, good to get out above that bar, good to get out above 7, 8. And so therefore, also okay to buy above these bars. 15, it's a reasonable stop order. I remember I said double bottom, nested high 2. Same with here, 20 and 21. And up here, 27, reasonable to exit longs. Therefore, okay to sell below 27. And then at some point, you see the bulls are not getting buying pressure. And if you're long for any reason, you just have to give up on the trade. And to me, 33 looks a little bit like a give up bar. But if you're still long for any reason, where did we become always in short? I think it became pretty neutral here. I would feel uncomfortable holding long below 27. So I'm not sure if it's always in long here anymore. Traditionally, because we have all these bars above the moving average, you can say it's always in long until we get consecutive bear bars. Maybe 33 breakout and follow through 34. Maybe it's always in short here, but it's not all that clear. Might be the bottom of a trading range. But then you keep adding bear bars, and then you notice, wow, we've had 6 or 7 bars without a pullback. This is a micro channel. It's a pretty big breakout on a higher time frame. It can be more clear on a 15-minute chart. So I say certainly buy bar 35 or 36. It's always in short, second leg down likely. And then down here, becoming a little bit climactic on 52. There might be some profit taking, but probably still minor reversal, but reasonable to start reducing your position below 52, below 56, but still not always in long, probably still always in short at this point. But then 63, reasonable to exit shorts above 63, so okay to buy, taking a chance. And then breakout to a new low, bull bar, closing near its high, 67, also reasonable to exit above this bar. Never triggered. And then we got a second reversal, 1, 2 on 70. So a possible stop order trade there. But if you're long here, now you have two legs up to the top of a bear channel. So stop order below 72. Never triggered, but eventually triggered below 73. 3 pushes down. You never really had a stop order trade down here unless you're on a very small time frame. Limit order trades, pretty much all the way up, traders buying 50% pullbacks or breakout points. And whenever there's a micro channel, let's see. So like I said, buyers at 50% pullbacks, the midpoint of bars, the midpoint of legs, all the way up, and then up here, micro channel, first reversal, probably minor, sellers above 37, sellers above 46, all the way down, probably sellers above here. 63 was low probability, so if you did buy, taking a chance. 64 is a disappointing entry bar. If you're buying 63, you want your entry bar to have no overlap and for it to look like maybe bar 71. So because of that, 64 might be a sell to close bar, betting that now you're at the top of a trading range and bulls will be disappointed after 2 legs up against the major direction of the trend. Breakout point here, probably sellers here. And that happened quickly. Bear breakout 66, breakout point, pullback 67. They tried to get a second leg, 2 attempts down, but they failed. Now there's support here. Second leg up, again testing resistance. Bulls trapped up here, looking to avoid a loss or exit with a smaller loss. So if you bought here, or let's say you bought above 63, bought more above 70, here's your average price. You were given an opportunity here. But we actually did test the high close of 64 during 73. And then I want to share my trade from today. Today was not great. I just had one trade and I was disappointed with my performance. I liked the first half of my process was good, but I have holes in my system. And today was a day where I made a mistake and it was an opportunity to patch a hole. So I have no signals all the way up. So I'm patiently waiting, just watching. I know I'm looking to buy, and then I get 17. So we have a bull breakout, and I'm looking to buy a pullback because we're at the high, and I suspect bulls are taking profits up here. They've been buying pullbacks all day. I'm looking to buy a pullback. We get bar 18, and I think, okay, that's one attempt down. If we get a second attempt down, testing this breakout point, the high of 15, the downside is probably limited, and I think we'll probably find support and then go to a new high. So I put a limit order to buy at the high of 15 with a stop order, a measured move down of 18. Triggered on 19. I'm long, and then I made a mistake here. 21 broke out above, if I remember correctly, broke out above 20, rallied to the high, pulled all the way back to the high of 20, rallied again to the close. And so I thought, we've already tested the high of bar 20. And at this point, I think I had pulled my stop to at least break even at this point. But at this point, if my target's here and I'm long here, how much am I willing to risk? There's no such thing as other people's money. So even though I'm at a profit on the trade, here's my target, or it's maybe a little bit higher. I was going for twice my risk, so let's look at it that way. I had a stop here, entry here, target here. That doesn't look quite right. I know I was looking to take profits at least a little bit above the prior high. But anyway, I made a mistake here because since 21 broke out once, retested it, and rallied again, I thought we'd have to go straight up. Otherwise, we're going to maybe get a lower high, double top, and start to pull back, form a trading range. And so I ended up putting my stop at the high of 20. And it just feels so silly after the fact. They're so quick on the open of 22, sold off, trapped me out, only to go to my target. So it's just one of those things that, makes you feel kind of dumb. Like, oh, that was stupid. But every mistake is a learning lesson. And I think it's good to reflect on your behavior, reflect on how it made you feel, reflect on what you can do to prevent mistakes like this in the future. So as much as it kind of sucks, it's always a good thing to make mistakes because they are learning opportunities, and the struggles you feel today are the growth for tomorrow. So there's almost no downside as long as you're controlling your process and you're paying attention to what you're doing. You either trade and make money and have a good day, or you trade and you lose money, but maybe you made a mistake and you learned a lesson. So there really should be no bad days when you're trading. So even though today kind of felt kind of dumb earlier, I'm grateful for the experience because each time I make a mistake, it teaches me a lesson. So I'm always grateful for that. Where do we go tomorrow? Here's the daily chart. We had this bear breakout, deep pullback, testing this breakout point, probably resistance here. As we can see, there were sellers. Now, this bull breakout might need a second leg up, but I think the upside is limited, and I think this bear breakout might need a second leg down. But it's confusing. Big down, big up, big down, big up. Limit order market, sellers above, and probably buyers below. But as far as buyers through here, the buyers may not come in until somewhere down here. And through here, we're in the middle of this range. So the way we closed today, I'm expecting trading range behavior. Unless we gap up tomorrow, then I'm expecting sellers up here. Or if we gap down, probably more buyers down here. But we'll see. All right, that's all for today. I appreciate everybody for watching, and I'll talk to everybody tomorrow. Thank you.